If you have been trading in the recent markets, you are probably familiar with all the volatility that's been going on. And today I'm here with some messages for young investors, for new day traders who are trying to make sense of what's going on but might not have the full picture regarding why that volatility is there. I'd also like to touch on the topic that the game smart money is playing with retail traders. So what is smart money? Smart money is the money bet by experts of markets like central banks, investment banks, funds, and some really smart individuals who know their ways around the market. Retail investors are people like you and me who do not have enough short-term visibility into different kinds of trends that might affect the asset prices in near term. There has been a surge of day traders in recent market. Robinhood has added more than 3 million funded accounts in 2020 through May alone. We're not just talking about the new signups here. We're talking about funded accounts. In the same time frame, Charles Schwab, that also owns TD Ameritrade now, is reporting a record number of new signups on their platforms too. And in the same time frame, stocks plunged into the fastest bear market ever. So let's talk about where all these investors came from. The first place it came from is from unemployment. COVID brought a surge in unemployment unlike any other seen in our lifetimes. You can see the data from Department of Labor here, where the chart shows unemployment in 3 different recessions. You can easily compare the impact that COVID brought to the labor market. You can see that between 2000 and 2004, the unemployment percentage reached close to 6%. Due to the 2008 subprime mortgage crisis, also known as housing crisis to some, the unemployment reached 10%. And now the pandemic, the unemployment reached a record number of 13.7%. People have lost their jobs. They need something to do. So what are they doing? It looks like they're trading, according to the data from all of these brokerage companies. Compared to any other recessions, it's easier now to invest because of zero commission apps like Robinhood. People feel that they can download some free trading apps, and with a few clicks of buttons and an easy online firm, they can be on their road to riches. The other factor that also played a role here is the stimulus check. For many people, it is an expendable resource of income. These are the people who already have jobs or they have other sources of income. For many others, it's their chance to convert that 1,000 into a million, maybe. Among these new day traders, there is also a new group of people that are introduced to the markets, are all of these gamblers who were sports betting. But now, since there is no sports going on, what are the gamblers doing? They're betting on the stocks now. Then there are gurus such as Davy day traders. Take a look.
The wild swings on Wall Street are bringing a new flood of new traders into the market. Case in point, Charles Schwab reporting a record number of new brokerage accounts opening. But if you don't know what you're doing, you could get burned big time. Many of you know our next guest, and he has his own cautionary tale to tell. David Portnoy is founder of Barstool Sports. About a few weeks ago, he decided to take a crack at day trading. He put $3 million into an E-Trade account, and he's currently down about $600,000. Dave, welcome.
How are you?
I feel like we should play the sad trombone when I say that. Had you ever traded a stock before this?
Yeah, I think I was a Twitter guy. So my first foray, I think I bought Twitter around 50 and then sold it around 18 and then watched it climb back up to 40. So I was 0 for 1 going into it.
So what's your what's in your portfolio right now, and how do you choose the stocks to go in there?
Yeah, so I'm flat right now. Today I was trading Shopify and Amazon all day. But basically, I look for stocks because I put a lot of money into it. I look for stocks that have high volatility and that a lot of volume, because I don't want to be like shaping the market. So I look for big stocks that a lot of people are trading a lot of. So
you mentioned 2 stocks today that you're in. Are you trading, millions of dollars worth at a time?
Oh, yeah. I mean, so I'm learning a lot as I go. I will say I was down 1.2 million, so I'm hot right now. But with this margin thing, which I had no idea about, I'll have like $12 million in play most of the time.
Oh, so you're leveraging your $3 million into much more.
Oh, yeah. Yes.
Wow, a guy who likes to take a challenge. All right. Davey Day Trader is the name that you have given yourself.
The sad thing is, he now has an army of followers that are following him and his trades on a daily basis.
Well, the retail trading boom is giving one man a whole lot of attention. The New York Times calling him, quote, the captain of the day traders. The FT coining him a retail bro. And Bloomberg saying Barstool Sports' Dave Portnoy is leading an army of day traders. Let's welcome back to Fast Money friend, Davey Day Trader, a.k.a. Dave Portnoy, the founder of Barstool Sports. Dave, always great to speak with you.
Thanks for having me.
You've gotten a lot of press. Do you think that's true? Do you think that you are leading an army of day traders out there? Because we all know that there is a rise in retail trading activity at this point, and you've got, what, 1 million followers?
Yeah, I don't know that I'm the leader. I mean, obviously the Corona and everybody staying at home has changed the playing field. People who used to sports bet or bet on sports now are doing this like I did. And we have a huge following for a certain demo. So I think it plays a role. We're just, I think, doing something that the financial community hasn't seen before, which is kind of making it fun. We're doing what we do. We're barstooling it. We're making hype videos. We're getting behind it. We're live streaming it. And I think a lot of the old time guys just don't know what the hell's going on with us. So they don't know what to make of us, and they don't have an explanation for why they keep saying everything's going to crash and everything keeps going up. So they're looking for something, and right now I seem like the easy answer.
I'd like to stop here and say that my job is not to discourage you. That's not my intention at all. In fact, I encourage people to trade or invest and grow their money. My last 2 videos are about what I learned after reading 70 books on money, and 50 of them were on the topic of investing. I wanted to invest, got crushed by the market, lost $20,000, and then I started learning. And now I'm sharing those knowledge on YouTube with all of you because I don't want other people to go through such losses that I went through. I have nothing against Dave Portnoy. I think he's a pretty solid guy and he has achieved a lot in his life. However, he might have a lot of money lying around that even if he loses them, it would not be a big deal for him. But if you are someone who isn't necessarily in the same financial situation as him, you should have a strategy in your day trading game. Trust me, buying a stock and hoping that the price will go up later in the day or tomorrow or next week or next year isn't a guaranteed way to make you rich. It's a guaranteed way to make you poor though. I've seen many new traders think that they're smart enough to time the market. In fact, I was trying to time the market when I first started trading 5 years ago.
It varies day by day, so the Robin Hood guys got cremated when the market corrected 7% in a day, okay? Look, you're looking for precision where precision doesn't exist.
He's totally right. You're looking for precision where precision does not exist. There is no way to time and predict the market. The only people who can predict the market with close to accuracy are the people causing those patterns to emerge in the market. For retail investors or traders like you and me, we need to implement a different strategy if we want to swim with the sharks. Remember, 80% of day traders lose money. I'm not saying that they always lose money. I'm talking about the net year-over-year return is negative for 80% of day traders out there. Most of them get discouraged and never come back. The remaining 20% are the experienced traders. They have tried and tested a strategy that works. They are disciplined and seldom deviate from their original plan. They have mastered the emotions of fear and greed. I was among those 80% at some point, and now 5 years later, I'm now in the 20%. So what changed? The only thing that changed is the knowledge that I have now. My intention is to inform you so that you can make better decisions in your investing or trading game. I have no incentive to provide you any biased information. My job is to provide you knowledge that is pure and unbiased. Neat knowledge. I'm willing to put in my time and do the research and present you the information that you need to know to be trading and investing in the current market situation. All I ask from you is to destroy that like and subscribe button. Retail day traders amount to a lot of money in the markets, but not to the amount that can move the markets in a way it has been moving lately. Now, there is no way to know or no data available to the public that can tell you who has been causing the market swings, whether it is the sharks or whether it is the schools of small fish. Robinhood is famous among a lot of new retail traders since the app was one of the first to introduce commission-free trading. There is a database called RobinTrack that takes the snapshot every hour of total trading volume through the app and total assets under management collectively from all the users. The research team at Barclays found out that Robinhood users were not behind the recent market upswings, contrary to what Wall Street were preaching a month ago. In fact, most of the top holdings by Robinhood Robinhood users have been losing money, according to this research by Barclay. Hear this out.
Well, it's been an interesting week for the markets, as we've been talking about all show. But on Monday, stocks finally went into positive territory for the year, and retail investors were partly credited for that strong V-shaped rally off of the March 23rd lows. But Barclays today saying not so fast. Retail investors and Robinhood were not behind the rally.
What the retail traders need to know is that when you lose your money in the market, someone else is actually making that money. Investing or trading is a zero-sum game. You are literally trying to beat some of the biggest financial organizations and some of the smartest people in this world whose only job is to outsmart you. And they do it in a very organized way. They have huge teams of data scientists that are collecting every kind of data available to them and make predictions on asset prices. You are against the smart money. And what smart money have been recently doing is that they have been pumping the stocks that are popular among retail traders using huge cash stockpiles that they have. This causes further appreciation in stock price in a very short period of time, which in turn causes the FOMO or FOMO or fear of missing out to kick in among the retail traders. And this normally happens with the new retail traders who get into the market. They want to get on the train before it takes off. When the price goes super high, smart money takes their profits. As the amount of money invested by them is very, very high, it takes them a few days to take their money out, causing a downward trend for that stock. This scares the traders who bought at the top or on the way to top. They see the prices decline and their total portfolio value declining at a faster than expected rate. What do they do next? They go ahead and sell. When this fear applies to a majority of retail traders, there are more sellers in the market than buyers. This causes stock prices to hit record lows. Then the institutional investor come in again and buy, and so the cycle continues. So it's a rinse and repeat. And you'd think things like this would be illegal? Well, guess what? It's not.
Top stocks on Robinhood. Fan favorites like Tesla, Apple, and Nikola getting crushed on the app in yesterday's sell-off.
As I was thinking about making this video, I even came across this shocking news that a 20-year-old took his own life after his account posted a huge loss of $730,000. News like this make me sad. To all the other young hustlers out there struggling with life and needing help, this clip is for you.
I'd have to disagree. Death is so final, whereas life is full of possibilities.
Like I said earlier in my video, I'm not really trying to discourage anyone from trading. I'm encouraging you to trade only after you learn how to trade. And by learning, I'm not talking about learning to click buttons on Robinhood app. I'm talking about investing some time in real education. I've compiled a list of my favorite books on trading in the description below. Go ahead and check them out. Before you invest some money in the stock market, please invest some time in learning the rules first. Remember, first you learn and then you earn. I said it in my first video and I'll say it again. I'm not on YouTube to sell you any course or anything here, unlike many other YouTubers. If you'd like to support my channel, please smash the like button and subscribe so that you automatically receive notifications when I drop new videos every week. The likes and subscribes also help the video go to the mainstream YouTube, where it gets recommended to other viewers like yourself who might get benefit from it. And as always, thanks for watching.